So the euro continues with its tight consolidation over the past several sessions. The market clearly is locked within a well-defined downtrend, capped below the 50-day moving average, and deeper setbacks are favored to retest the recent 1098 11-year low from the 23rd of January. A break below that low would expose the 110 psychological barrier further down. Key resistance right now comes in at 115.34, which is the high from the 3rd of February. If we do see a break above 15.34, it could open the door for a move up towards 17.50 or up towards the 50-day moving average at 18.50 about, but ultimately only back above the 50-day moving average would compromise the bearish outlook and give reason for pause. Sterling dollar. So cable is consolidating off recent gains that we saw following the break of key resistance at 52.70. This could open the door for additional corrective upside towards the 54.85 previous support area. But again, the trend here is clearly bearish, and a lower top is sought out in favor of fresh downside to retest and break below the 49.51 2015 low. Dollar yen. So dollar yen is broken out of some triangle resistance, with the break now exposing a retest of the December 7-year high at 121.85. A break above 121.85 would open a fresh upside towards the 125 area further up, while only back up below 15.55 at this point would compromise the current bullish outlook. Any setbacks for now are expected to find some really good support into that previous triangle resistance into the 118 area. Euro Swiss. So Euro Swiss has been relatively quiet following the fireworks that we saw a few weeks back, and the market is now locked at a consolidation above some previous resistance at 102.50. The break of 102.50, however, does expose fresh upside towards 107 over the coming sessions, and any setbacks should be very well supported now ahead of that 102.50 previous resistance level. Aussie dollar. So Aussie is looking like it's rolling back over right now. We saw the market stall out into a correction mode at 78.76, and it looks like a lower top could be carving, which will be confirmed on a break and daily close below 76.25. A break below 76.25 with a daily close would expose a fresh downside extension towards the next key objective to the downside, which comes in at a measured move 73.75. Dollar CAD. So dollar CAD clearly remains locked within a very well-defined uptrend, with the market at fresh multi-year highs. The recent highs that we saw at 128 have sort of capped gains for now, with the market deferring to some consolidation to allow for technical studies to unwind. But once these studies unwind, look for a higher low to carve out ahead of the next upside extension above 128 and towards the 2009 peak at 130.65. Kiwi dollar. So Kiwi gains have also been corrective in recent sessions after the market broke down to a multi-year low of 71.76, but it looks like it could be looking to carve out a lower top now in favor of a fresh downside extension back below 71.76, exposing the 65 area ultimately further down. Really, at this point, only back above 76, some solid previous support would compromise or delay the immediate bearish outlook. SPX 500. So while the S&P 500 has been bid in recent sessions all the way back up towards and above 2070, the structure continues to show good, solid internal range resistance ahead of the critical December record highs. So if we look at this line here, we can see roughly rallies up towards that high before it actually happened back, going back to December, early December, and then again after we made the high, we kept stalling out on rallies up towards that record high, and so it looks like we could be stalling out again. I think that we'll figure that out today, but if the market breaks and closes back below 2057, yesterday's low on Thursday, that could take the pressure off the top side and once again suggest the market is topping out. Key support will need to be taken out at 1968, the 16th of December low, to confirm a top, but again, while the market sort of, even though it holds up here, it continues to show resistance up ahead of the record high, and until that record high is broken, there still is risk for the formation of a top. Gold. So gold has pulled back quite sharply and continued to extend declines in Wednesday trade, with the market trading all the way down to about the 1217 area. But again, if you look at the market since the recovery from November of 2014, it looks like we're in sort of this rising trend line, and the market, after breaking above 1256, which had been some previous key resistance, shifted the structure a little bit. So look for this rising trend line to once again be well supported, and for the formation of a higher low somewhere over the coming sessions in favor of a bullish resumption back towards the recent highs that we saw at 1307, 1308, and towards 1345 further up.